Hello, dear students. Assalamu alaikum. I hope that all of you are well. I am Mohammad Samad Khan, lecturer, Department of Accounting, Dhaka College, Dhaka. Today, I am going to take the third class on the contribution of financial leverage and capital structure. Okay, I think that all of you have done the previous work, which is already done by me. Okay, please, let's see. I write down a question in the whiteboard. I write down here, what is write down? Just I read it. Say, Shah Ali International Limited has sales taka 1 lakh. Its variable cost is 60%. Variable operating expense taka 10,000 taka. And fixed operating expense is 10,000 taka. Fixed financial expense is 5,000 taka. Interest on 10%. Okay. Bond of taka 50,000 taka. Equity share capital of taka 50,000 taka, which is divided into 500 share, which is each 100 taka. Okay. Then here tax rate is 50% on 10% bond, which is declared here. Okay. Please. Already we learned that already in the previous class we learned that there is no fixed cost, there is no leverage. Okay, but if the sales become double, then what will be the EPS? What will be the EPS? Okay. In this question today also we bring out that show the changes the EPS when the sales become double. Okay, I mean here sales is 1 lakh taka, and then we should bring out it or we should work out it for the 2 lakh taka. I mean, and then we say that what is the effect? What is the effect? Changes effect on the EPS, on the EPS, right? May be shown as follows. Okay, please, dear student, I think you should follow the question, and I also think that all of you already write down the question in your script. Okay, I think all of you already write down this. Okay, please. Here, I want to say what are seen here by you, right? What are seen here, or what is seen here? I see that there is 60% variable cost. I mean, it is told that it is CGS. I mean, cost of goods sold, right? Cost of goods sold. Okay, fine. So here in the above problem, we see that there is variable operating expense 10,000 taka and fixed operating expense. Here is fixed operating expense. Fixed operating expense. Okay. Here is fixed operating expense. Okay, it is fixed. It is fixed. You know, it is fixed. Okay. Then we see that the fixed financial charge. Fixed financial charge, which is 5,000 taka on 50,000 taka bond 10%. Okay. So here we see that fixed operating expense 10,000 taka, fixed financial charge 5,000 taka. We already learned that it is assumed that when here financial charge, if there is leverage, I mean here what is saying, when there is leverage is fixed operating leverage, operating expense fixed, and fixed financial charges, I mean bond. When leverage which is operating or financial and leverage is favorable, and if sales become double, then the EPS will be increase at more proportion. I think that uh, here we already seen that fixed operating expense 10,000 taka and fixed financial charges 5,000 taka. So here 2 is operating leverage and second one is financial leverage. So and it is, if it is favorable, and if it is favorable, then 100% EPS and become sales become double, then EPS become increase at more proportion. Okay, let's see, dear students. Sorry, uh, I erase this. I think you know that variable expense per unit is fixed. Okay, and then fixed expense per unit is variable. I think you already known this, known about this. Okay, okay. So let's start the math. Solve the math. Okay, please. Here particulars. Okay. Then I think it is sales. Assume that 100% sales. It is 100% sales column, and then it is 200% sales column. Okay, dear students, here say sales. Okay, sales is 1 lakh taka. In the question, sales 100% is 1 lakh taka. So 200% is 2 lakh taka. Okay, less CGS. CGS means cost of goods sold or variable cost, which is 60% on sales, which is 60% on sales. Is it right? Okay, so 60%, I mean 60,000 taka and 120,000 taka. Okay, so it is 40,000 taka and it is 80,000 taka. Am I right? We should calculate this. 2 lakh into 0.6, 120. Okay, it is called gross margin. Okay, less total operating expense. Total operating expense One is variable and second is fixed. In the question, variable is 10,000 taka for 1 lakh sales. Okay? And then fixed is 10,000 taka. Sorry, directly write this 10,000 taka and then fixed 10,000 taka should be deducted from 40,000 taka, I mean from gross margin. Okay, then it is variable 20,000 taka, then it is 10,000 taka. It should be deducted from 80,000 taka. Okay, so here the result is 20,000 taka and then 50,000 taka. Okay, it is called income from operation. Income from operation plus add others income, maybe dividend or interest. If you have dividend interest income, then it will be added. Okay, so there is no dividend or interest income, so 0. $20,000 taka and then 50,000 taka. Okay, then less other expenses and losses. There is no, like the dividend, there is no dividend expense here, so EBIT is 20,000 taka and 50,000 taka. 20,000 taka for 1 lakh and 50,000 taka for 2 lakh sales. Okay, it is called EBIT. It is called EBIT, I mean earning before interest and tax. Okay, let's see then. Minus interest. On bond, which is fixed financial charges. Okay, so interest on 5%, sorry 10% on 50,000 taka, which is 5,000 taka. So 5,000 taka, it is fixed. So in two sides it is 5,000 taka. Okay, so it is 15,000 taka, it is 45,000 taka. Okay, so it is called EBT, earning before tax. Okay, here less tax is at 50%. Okay, so 15%, 50% of 15,000 taka, so 7,500 taka, and it is 22,500 taka. It is called EAT. Okay, so here 15,000 taka minus 7,500 taka, it is called 7,500 taka, and here 22,500 taka. Okay, total outstanding shares. Here total outstanding share is 500. Then EPS is 7,500 divide 500. Okay, 15 taka. Then second one is 22,500 taka divide 500 taka, it is 45 taka. So the changes in between sales 100% and 200%, the changes or increase EPS, the effect of changes on EPS, if sales become double, then the EPS is, then the changes increase, 45 minus 15 taka equal 30 taka. 30 taka divided 15 into 100, which is 30 divided 15 equal 200%. 200%. So here in the above question we see that if there is two leverages, one is operating leverage and second one is financial leverage, and leverage is favorable, then and then sales become double, 100% to 200%, then EPS increased by 200%, earning per share increased by 200%. Okay, dear students, we see that after at present we see some clause. I think DOL, okay, DOL elaboration means, DOL means degree of operating leverage. Degree of operating leverage. Okay, so what's the degree of operating leverage? You know, we have already done or solved the maths, which is operating leverage and which is financial leverage. So here we see that DOL, degree of operating leverage, here percent change in EBIT divided percent change in sales. Okay, so here what is the changes? See, percent change in EBIT. Where is EBIT? EBIT, okay? EBIT 20,000 taka, 50,000 taka, okay? So what is the changes here? 50,000 taka or 20,000 taka. EBIT 50,000 taka minus 20,000 taka divided change is 20,000 taka. Okay. Here change in sales, I mean 2 lakh taka minus 1 lakh taka, because it is turned into 1 lakh from 2 lakh, 1 lakh to 2 lakh. Okay. Then 1 lakh. Okay, so here we see that 30,000 divided 20,000 taka, then 1 lakh divided 1 lakh. It is 30,000 taka, I mean 30,000 taka 1.5 divided 1. Okay, so it is 1.5. I mean here we see that it is 1.5. Okay, degree of financial leverage. Okay, degree of financial leverage. It is we can say that percent change in EBT, earning before tax. Okay, then percent change in EBIT. Okay, percent change in EBIT. Here we see the change in EBT 45 15,000 taka. So here 45,000 taka minus 15,000 taka. Okay, here 15,000 taka. Then percent change in EBIT, I mean it is okay. Percent change in EBIT, I mean directly I write down here 1.5. Okay. Okay, so here we see that 45 minus 15, 45 minus 15, 30 divided 15, 2 divided 1.5. Okay, 2 divided 1.5, it is 1.33, 1.333, 1.333, 1.333. Okay. Okay, here DUL and DFL. I mean DUL, degree of operating leverage, and then second one is degree of financial leverage. Okay, so two things here bring out DOL and DFL. Okay, I erase this please. Just I write down here DOL equal 1.5 and DFL equal 1.333. Okay, so here we should bring the DCL, degree of combined leverage, percent change in EBT, it is clue, divided percent change in sales, it is clue. Should be understand and should be realized what is written here. Okay, percent change in EBT, I mean EBT, percent change in EBT 45,000, I mean 45,000, and then 15,000 taka, 15,000 taka, then percent change is 2 lakh, 1 lakh, 1 lakh. Okay, so 45, I mean 30,000 taka, 2 divided 1 equal 2. Okay, 45 minus 15 equal 30 divide 15 2, that is 2 minus 1 divide 1. Okay, 1, so 2. So DCL is 2, degree of combined labors. DCL, degree of combined labors. It is the combination of DUL and DFL. When we simplify DUL and DFL, then it will be DCL. I mean DCL, I mean DCL equal DOL and DFL. Okay, so here DOL is 1.5 and DFL is 1.333. So what is going on? 1.5 into 1.3333, 1.9995. So it is called equivalent to 2. Okay, so here we see that DCL equal DUL into DFL, which is equivalent to DCL. Here we bring DCL 2 and then DCL here we bring also 2. Okay, dear students, I hope all of you realize this math, and also you will do this math at home. Please stay home, stay safe.